Friday was a brutal day in the stock market. There is no sugarcoating it. S&P closed at minus 1.7%. The Nasdaq was down 1.9%, and Dow Jones was down close to 1%. We saw a fresh 2026 lows on the S&P, and in fact, the whole of last week was the worst week so far in 2026, with the S&P down close to 3%. Now, there is a silver little lining that we saw, which was that in the closing hours on Friday, we did saw some sort of rebound happening into the closing bell, which I will talk about what actually happened. But if you thought the weekend would cool things off, I have some bad news for all of us because the geopolitical situation of the US-Iran war just escalated and market sentiments is hitting absolute extremes. So in today's video, I will be breaking down the exact chain reaction that caused Friday's crash and this little rebound that we saw, the new trends that developed over the weekend, and how you need to position yourself for the week ahead. Because the biggest risk right now is not the market direction, but it is the sheer speed at which the floor is shifting. We are officially in a headline-driven market. You can throw fundamentals out of the door for now because on Friday, the reason why we saw massive intraday swings was strictly based on escalation fears involving Iran. So the geopolitical headlines themselves also made it far more chaotic. So the first thing that actually came out, which we saw in the afternoon on Eastern time, was that the Trump administration was making heavy preparations for potential use of ground troops in Iran. And this caused the intraday sentiment to turn sharply lower after this was announced. And added on to this was that Trump also signaled that he did not want a ceasefire with Iran. And this was the whole reason that helped drive the S&P 500 to that fresh 2026 low that we saw during this session. Now, later in the day, which was actually just 1.5 hours later, when the market just closed, sentiments totally flipped because Trump came out and said that he is considering winding down military operations literally just 1.5 hours later of saying that he doesn't want a ceasefire. And we saw algorithms bought the dip right after market close, and as I shared earlier, fundamentals are out of the window right now. The market is literally trading minute by minute based entirely on the words coming out of Trump's mouth. So this was what happened on Friday, but over the weekend, which was on Saturday and Sunday, there was also even more news that came out, right? Because everyone was thinking that, oh, the last news that we have was he was considering winding down, market is open on Monday, it should be good. But this is actually what happened in just the next 48 hours. So on Saturday, we did saw that the team is also planning for potential Iran peace talks. So yay, this is good news. It is actually a good follow-up from the end that we saw on Friday of him saying that he wants to wind down operations. So there were also leaks about a potential deal framework between the US and Iran. And for a brief moment, we did see diplomatic de-escalation very, very possible. But then again, a few hours later, that optimism was completely destroyed. And this time, he issued another massive warning stating that the US would obliterate Iran's various power plants, starting with the biggest one first. And what is the threat that he gave is that if Iran doesn't fully open the Strait of Hormuz within 48 hours. Okay, so this is it, and the market is totally reacting to this. Now we are staring down between two barrels. The first barrel is opposing force. The first opposing force is a very clean diplomatic solution of ceasefire on both parties, but we do also know Iran's demands are also there, same as the US demands. And on the other end of the opposing force is absolute military escalation. Okay, and we saw that reflecting in futures right now because this specific setup that we are seeing is pure gasoline for volatility. Markets are closed right now as of this video. What we saw was also on Bitcoin because the crypto market is open even over the weekends, and we got a first sign of how the market might react. Bitcoin actually dropped from 17K back down to 68K once we saw news of that escalation. So this was a little teaser of how the market might react when Monday opens. And we did also see it reflected in oil. Oil market is also closed as of this video, but on Friday when the escalations were announced, Brent actually briefly topped $119 before pulling back And basically Wall Street is still pricing in this disruption risk in the Gulf, supply chain parallels, continued block shipping routes on the Straits of Hormuz, and choke energy flows. And when oil becomes an inflation crisis, as oil prices continues creeping up, which is what we are seeing now, this is where we see entire market repricing. And we are 3 weeks into the war, moving on to our fourth week. When we saw the 10-year yield, which is the 10-year treasury yield, this has finally spiked up to close to 4.4% as well. So this is tightening financial conditions immediately. And higher yields, what does it mean? It means higher borrowing costs, and this will crush growth stocks and tech valuations, which is the reason why we saw a lot of repricing across all sectors on Friday. And when we look at the fear and greed also just crashed to 15. And this is the deepest, this is deep into extreme fear right now, the lowest level since November that we saw, November last year. Now let's take a look at the S&P chart, and I wanted to show you where I think we might possibly hit based on all the news that came out over the weekend and where we stand now. Now, looking at the daily chart first, you can see that we have already broken the 200 EMA support line. And the last time that we saw this happen was actually back in Liberation Day, where we saw that full drop all the way back down. I think close to, from the previous high, was close to 16%, right? This was the last time that we saw it broke below the 200 EMA before violently breaking down even more and going back up after Trump announced that the tariffs were delayed. But if we look a little bit further back in history, the last time this was broken was back in 2023, October and November. Now, this was when the Israel-Hamas war happened. It was the primary geopolitical catalyst then. But however, it was not the sole cause of the decline then, because at that moment, there were also surging bond yields. And by early November, you can see that this was resolved pretty quickly and the market rallied after, because the Treasury actually announced slower bond issuance, and Federal Reserve also signaled that it was slightly done hiking rates. So it is a different situation from where we are today now, because what is the news that we have from the Federal Reserve now, which is that rate hikes is on the table. Okay, and oil prices is very high and inflation is still at a high. So it is a slightly different situation from back in 2023, as well as back in Liberation Day, where Trump had the full control. And right now, I would say that not only Trump, but the control also falls in Iran's hand. And when we look at the weekly chart as well, you can see that we are touching this 50 weekly EMA right now. And even though we did close above, very close above, very close, I would say it's on the line, but it's possible that based on what we see, we might see it pulling back. So where are the levels that I think that we might actually potentially revisit if the escalation continues to stay for the next few weeks? Oil prices continue to stay high. I would say that a probable level would be that previous all-time high before Liberation Day happened, which is around the 610, 611, and the 605 region right over here. And this also is in line with the 100 weekly EMA as well. So we might possibly pull back and test these levels if we see things happening and escalating further. Now, so you've seen everything that has happened over the weekend. I wanted to take some time to share with all of you about how to position yourself for the week ahead, because right now, a lot of things are happening, and the only thing that we know is that right now the market is a market that deserves respect, and as well as no panic, even though everyone is screaming panic right now, because macro and liquidity are definitely driving the moves more than fundamentals now. Okay. And one important thing is that you don't have to predict the next headline. Okay, and you don't have to catch every single bounce, because right now, with everything that is hinging on Trump's words, you are literally predicting what is he going to say next. And as you can see, since Friday, he can literally say something good, and in the next few hours, he can say something bad. So predicting what he is trying to say is literally next to impossible. And what is the more useful mindset, instead of reacting to every single news that is going to come out or that has came out? The more useful mindset that you want to focus on is to stay disciplined and focus on quality over reacting to volatility. Okay, so what do we mean by focus on quality? That means focus on the companies that you have, focus on the companies that you want to add, because chances are they are on some pretty good discount now, and these are the ones that will perform over the long term, assuming that you are looking at those that has these secular trends ahead. right? And you want to keep your focus on dollar cost averaging on these high quality companies, right? Volatility can absolutely create opportunity, especially in strong businesses that gets dragged down together with the indices. But these opportunities are easier to take advantage of when you're calm and selective and not when you're reacting emotionally to every swing. So last but not least is that preparation and patience outperform prediction and emotional decision making every single time. And this is what you want to prepare in this kind of environment. Many people will just be following and trying to trade whatever Trump says every single word, but that is the one where you will probably be glued onto your screen and you won't know what is he going to say next. Is it going to go up or is it going to go down? So the best way that you can do is to prepare, not predict, and have patience, right? And what do I mean by that? That means all of the companies that you have, work on the valuations, do the technicals for a lot of these companies because many of them are reaching that very attractive buy point that will give you strong returns over the next few years. Okay, patience always beats panic. Always remember that. And that's what I have for you for today's video. If you do enjoy such content, be sure to hit that like and subscribe button. It will really help me to create more of such content for you. And next week, as the week starts, I will continue to give you guys more updates, more videos of what is happening so you can further prepare yourself and follow on as the move changes every single time. Okay, thank you, and I'll see you in the next one.